Ladies and gentlemen, good afternoon. I welcome you all to the H2 and FY24 post-earnings conference call of Kilburn Engineering Limited. Today on the call from the management, we have with us Mr. Ranjit Lala, Managing Director, Mr. Sachin Vijayakar, Chief Financial Officer, Mr. K. Vijay Shankar Karta, MD of ME Energy and Director in Kilburn Engineering, and Mr. Amritanshu Khaitan, Promoter and Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainty. Also, a reminder that this call is being recorded. I would now request the management to detail us about the business performance highlights for Q4 and the year that went by, growth plans and vision for the coming year, post which we will open the floor for Q&A. Over to you, sir.
Thank you, Vinay. I would welcome you all to the earnings call today. It's time of the year for us to apprise you of the results and the development at Kilburn Engineering and our subsidiary ME Energy. To begin with, for the benefit of those attending our call for the first time, I'll brief you on our business. Based at MIDC Sarauli near Kalyan, Kilburn has been in the business for 4 decades into engineering manufacturing of customized process equipment, industrial drying solutions, packages, like rotary dryers, paddle dryers, VFPDs, and others. Our standard products also include dryers and withering systems for the tea industry. Coming to our subsidiary ME Energy, the acquisition of this company by Kilburn was completed on 28th of Feb 2024. ME Energy, based at Pune, is a leading waste heat recovery and waste heat reutilization systems provider, which are designed to deliver energy-saving solutions. Their portfolio consists of waste heat recovery units, process integrated boilers, thermal oil systems, heat exchangers, and other thermal engineering solutions. These applications of ME are found in almost all industrial applications. Since the product portfolio of both the companies are complementary in nature, we expect a good synergy in the coming times. Coming to the results, KEL results on a standalone basis are as follows. Revenue from operation for Q4 stood at 85.25 crores, and for the financial year it was 293.2 crores. This is an increase of 32% year on year. EBITDA for Q4 was 19.1 crores at 22%, and for the year it was at 64.87 crores at 22.1%. As I mentioned, we had completed the acquisition of ME Energy on 20th Feb. The consolidated figures stand as revenue from operations 329.48 crores and EBITDA of 76.39 crores. This is the post-acquisition figures. Our order book backlog as of 31st March at group level, that is both the companies together, stand at 284 crores. It is a good, robust and well-diversified backlog. In the current financial year, we have received orders of 65 crores till date. In addition, our current inquiry pipeline is in the range of 2,000 plus crores for both the companies together. At the group level, we are targeting order intake of 500 crores plus. For the financial year 24-25, we are targeting a consolidated revenue of 500 crores plus with an EBITDA of 20%. So all in all, we are looking forward to a busy year ahead. Thank you.
Thank you, sir. Do we start the Q&A?
Yeah.
Okay. Anybody who wishes to ask a question may use the option of raise hand now. We will invite you to ask the question. In case you're unable to do that, you can put the questions in chat and we'll ask on your behalf. So we'll start the first question from Varun Agarwal. Varun, you can go ahead, please.
Congratulations for the consistent performance. I just wanted to know to achieve the targeted growth of 500 crores, do we need to add any capacities in the existing units?
Right, Varun. So we have planned expansion of the ME Energy factory at Pune, for which we have set aside a capex.
At Kilburn, do we need to add anything additional?
At Kilburn, our capex is more to upgrade our factory. For example, we have recently added a clean room for special kind of welding. So we are looking at capex which can enhance our performance. As far as Kilburn is concerned, we know that we don't have any further space for expansion. But at ME Energy, I've also informed in the past that we have sufficient land where we can build 2 bays more.
Thank you and all the best.
Thank you.
Thanks. We'll take the next question from Jinesh Tipani.
Congratulations, sir, for good set of numbers. So,
Thank
one
you.
thing I'd like to ask on opportunity, as I was reading, this company Epsilon India, who is doing capex worth rupees 10,000 crores in carbon black. And as we have something about 35% of market share, 35% of value we can supply to the entire capex and having 80% market share. So, sir, what are our views on the growth on this capex which is done by Epsilon India?
Well, Epsilon India is definitely an important customer to us, and we have been supplying them from time to time. But there's only a certain limit to which we can accept orders, right? And they may have an expansion of 10,000 crores, but the level of orders that we can get could be in the 50 or 60 crores as of now.
For the entire capex which they'll be doing.
I mean, that's what we would be targeting, because the capex would be a lot more than we can offer.
Ranjit, if I can just mention, the news on Epsilon's capex is also for different industries they're getting into, like battery grade, battery technology. So I don't think the 10,000 crores capex is for carbon black per se. Whatever capacity expansion they do in carbon black is what Kilburn will address. Beyond that, they have yet not given details to us if there's any other opportunity for us to address any capex with them.
Okay. And sir, is my understanding correct that we can supply capex value up to 35% of the entire carbon black capex?
If you look at the total carbon black plant today, after acquiring ME Energy, we have the capability to give over 50% of the plant expansion.
Okay. And sir, as we have given consolidated numbers of quarter 4, can you just give the highlight what would be the consolidated numbers of quarter 3?
There was no
Revenue and EBITDA?
consolidation. There was no consolidation earlier. The acquisition got completed only on 20th of February.
Okay, so can you please guide what was the revenue booked in ME Energy up to Q3 and in Q4?
Yeah,
Sachin, you can discuss.
Out of the total revenue of 76 crores for the entire year, 36 was booked during this from 20th onwards till year end. So what is consolidated with our revenue is 36 crores of top line and 11 crores of bottom line, PBT. That is what is consolidated.
Okay, got it, sir. And would you like to give any target revenues for FY26 and 7, as we are close to achieve 500 crores for FY25?
Well, one step at a time. Right now, our target is to cross 500 crores in the current financial year.
Okay, thank you. All the best.
Thank you. We'll take the next question from Agastya. Agastya, you can go ahead, please.
Am I audible?
Yes.
Good noon. Hello, Vinay bhai. Thank you for the opportunity and congratulations, sir. Great numbers. Sir, could you just please repeat your EBITDA margin guidance?
It would be in the range of 20%.
20%. So, you cater to a lot of different industries and you just touched upon your capabilities in terms of what you can handle in carbon black. Can you also provide some qualitative understanding as to your capabilities in the other industry segments? And also some commentary on with respect to demand that you are seeing in these industry segments.
Well, we cater to soda ash as well, then the petrochemical business, the fertilizer business, oil and gas. We are also talking about getting into the cement industry. So we are already there in the food industry, in the tea and drying. So we are across many segments. We are to chemicals industry. Uh, when we talk about the demand, I can say that our current inquiry pipeline is in the range of 2,000 crore plus. Okay. So let's say around 1,500 crores for Kilburn, around 700 crores for ME Energy, right? And this would give you an idea as to what kind of opportunities exist. So that's how we are targeting a figure of 500 crores plus this year.
So my question on the capabilities was more like you just now you guys said that if there is a large carbon black capex announced, then you guys can provide 50% of the you have the inherent capabilities to provide to cater to or address 50% of the capex, right? So in the other industries, to what level of expertise and capabilities have you reached? That was my question. So for example, if there is a soda ash plant, how much can you provide?
Well, I would not have a number offhand, but what we try to do is that along with our equipment that we manufacture, we also try to provide the peripherals, more as a solution
Right.
to the customer. And that depends on a case basis. Giving a ballpark number may be difficult at this point of time as to what portion of soda ash plant we can provide.
All right. And so one final question, in terms of what you provide your clients, how much of them are consumable in nature? Are there any like pieces of machinery which get like there is a much frequent change or turnaround in those machine? These all are mechanical systems, right? So wear and tear is obvious. So do you have any components which have a much higher frequency in terms of wear and tear?
Well, most of the capex equipment that gets into these industries have a life cycle of around 20 to 25 years. Okay.
Right.
And
Right.
there might be some components which may need a replacement, which we supply from time to time.
It's minor then. Okay.
It's a minor. Let's say
Right.
it would be in the range of 5% or so as of now.
Right. Right. And so one final question on the EBITDA margins, you guided towards 20%, but as the scale of the company goes up, won't operating leverage kick in?
Well, definitely it will. But as I said, these are the guidance numbers. So I talk about 20%. But whenever it has been possible, to save on through our procurement, through processes, we have crossed 20% as well. But I would say at this point of time, we stick to 20%.
Thank you very much, sir. All the best.
Thank you.
Thank you. We'll take the next question from Darshil Zaveri. Darshil, you can go ahead, please.
Hello. Good afternoon, sir. Thank you so much for taking that question. Hope I'm audible, sir. Hello.
Yeah, Darshil ji.
Yeah. Thank you so much.
Darshil, you need to
Firstly,
speak up a bit.
congratulations.
Yeah, you can. You're not very well
First,
audible. Speak louder.
yeah. Hi. So, firstly, congratulations on a great set of results, sir. Sir, I just wanted to know, sir, we are guiding for 500 crores revenue, but we've already reached that run rate in Q4. So are we being a bit conservative because we also have a good pipeline? So is it on the lower end that we're guiding? Any color on that, sir?
Well, where we stand today as a group is, I think, around 326 crores. So 329 crores, sorry. Okay. And I'm talking about a number of 500 crores. I think you should see how we have progressed in the last 2 years. So being at, 130, 140 crores 2 years back and reaching 500 crores is definitely not a conservative roadmap. Okay. And again, these are, as I said, these are numbers which we see today. Tomorrow, if there are ways of any other organic, inorganic growth, we are open to that.
Yeah, so I mean being conservative in that sense. I meant we've already reached the run rate of 500 crores. So that is not in any other sense. That we already kind of reached the targeted run rate. So just wanted to know about that.
So that's
So
a target
if
for
I
the
can,
current year, 500 crores plus revenue.
okay, sir. And so is it just are the orders are we getting impacted because of elections or something that maybe more orders will flow in Q2? Is that the sense that you get?
No, not really. I think orders have been pouring in. As I said, we have got orders worth 65 crores in the current financial year to date. So things have been quite smooth. And as it is in Q1, you'll always see some action slowing down. Okay, because the companies are just rolling out their capex plans and their purchases. So I think we are well on track as of now.
Oh,
And,
and so,
election is not really impacted as such.
oh, okay, that's a great thing, sir. So just last, sir, in terms of margins, uh, Kilburn itself could do 20%, but I think MB Energy has a better margin. Why not is it a similar margin?
Sachin, can you take that? I don't.
I couldn't get.
Yeah,
we
yeah.
can't hear you
I'm just
properly.
asking. Yeah, ME Energy, as a standalone company, it's also in the similar margin as Kilburn, or is it more? Does it have higher margins?
Uh, for the past 1 or 2 years, their EBITDA margins have been around 12 to 13%. So going ahead with Kilburn's collaboration with them, and together we are targeting a EBITDA margin of around 20%.
Oh, oh, oh. That fair enough. So that's it from my side, sir. All
Yeah.
the best. Thank you.
Thank you.
Thank you. We'll take the next question from Sagar Shah. Sagar, you can go ahead, please.
Yeah, sure. Thank you for the opportunity. Actually, my first question was related to our business. In this financial year and in this quarter again, we are seeing a high order from the chemical sector. So you have explained in the last 2 quarters that what exactly is the change that we are looking actually in Kilburn Energy based on the projects that we are from end to end that we are executing. But can you elaborate that whether we are focusing on this current order book, that we are focusing on the existing systems, or it is just product based? Can you please elaborate that, and that what exactly gives you the confidence that going ahead that will be achieving more than almost from here at least more than 40% growth in the revenues, and going ahead the kind of EBITDA margins also that we are envisaging? What gives you the confidence?
First of all, our orders would emanate from the current pipeline that we have, which I mentioned it's in the range of 2,000 crores plus. Okay, that is one. Secondly, we know our hit rates, we know our customers, and we start working with them right from the drawing board. When they are planning their capex, at that point of time itself, we start getting the inputs from them, and we give them our inputs. So it's like holding hands from day one of their, project needs. Okay. As far as the spread of the inquiries is concerned, we have a very good spread across segments. For example, we have good inquiries from carbon black, soda ash. This year, very good from chemicals, petrochemicals, and we're also looking forward to the cement segment. So all in all, I can say that we don't depend on one single segment as such. We have at least 8 to 10 areas where we are working at all points of time. So if any sector is doing well, it's good for us. But if it doesn't do well, there are others which are performing. So that gives us the high confidence level. And that's how we have been working for last 2 to 3 years, I would say. Does that
Okay.
answer the question?
Yes, yes, certainly. So this is basically you envisage actually based on the current outlook and based on the sector diversification.
Right.
Based on now with any energy, now you will be focusing on even cements and something like through any energy you have penetrated in the steel sector also. So this sector diversification is one of the catalysts behind the kind of growth, as you said, for Kilburn in the next 3 years. and that will set you apart from the industry, because as far as the chemical sector is concerned, it's looking like you are the something like you're on the plinth of the black, that you're getting these orders, you're getting a robust outlook actually. So that is the confidence that you're getting, right?
Right. So I would put it this way: Kilburn by itself for the last 2 to 3 years has been working on having a diversified, approach, and with ME Energy acquisition, it's a win-win for both. So we do get a chance or a leverage where they are strong, and similarly they do get a chance to penetrate where we are strong. And I can say that one of the next segments that we are targeting is the cement industry.
Okay, so basically, do you on this current business only, do you have are you introducing new products to each and every sector, or if the existing products are getting traction in the new projects also?
Right. So let me answer this question in two parts. What we are doing is we are offering our portfolio, combined portfolio, to all the sectors. However, we are open to new tie-ups, new technologies, and we are already working on that. So if we find something interesting anywhere globally, we are ready for a technology tie-up. So that is also on in parallel.
Okay, okay, sure. So my second question was related to the margin profile. Our standalone margin was at around 22%, and console is at around 25%. And based on the guidance that you had given in the last quarter, actually actually you had guided that margins would probably come down because ME Energy margins are at around 12-13%. But on the contrary, we have actually gained. So, and the margin outlook is at around 20% that you have given. So basically, can we something like make a point that ME Energy margins are actually greater than current Kilburn's margins, and do we actually stand on that we will stand at current margins right now?
Saga, that was a very long question, so I will try to answer it in bits and pieces.
Sure, sir.
First of all, in the last quarter, the guidance that we had given was 18 to 20%. I mean, we've always said that we will be talking about 18 to 20%. Yeah, there will be times that we may cross 20. As far as the combined margins are concerned, this 12 to 13% figure has just been rolled out right now by Sachin, how it was in the past. Why it
Okay.
is higher side, maybe Sachin can answer that. Sachin, can you answer that?
Yeah, the combined EBITDA which we are showing of 25% doesn't give a right picture, because the turnover and the EBITDA of ME Energy are only for a period of 40 days. So
Correct.
doesn't give a correct picture. So we have to go see for the total year. So as I told you, their margins are on a little lower side. So going ahead, combined margins, we expect to be in the range of around 20% EBITDA.
Okay, okay.
If I may just add, with ME Energy being acquired by Kilburn, the revenue will also be scaled up, and the visibility is that ME Energy will also get economies of scale in the coming year. So with that happening, when we are looking at consolidated EBITDA margins of 20%, we are expecting ME Energy also to be closer to those margin levels as compared to the 12-13% they were in FY24. So you will see higher margins in ME Energy as the turnover of the company is scaled up.
Okay. Okay, got it. And my last question, sir, was related to our tax rate. In this current quarter, we had used the deferred tax assets, and our total income tax was relatively lower. So going ahead, what is the normal tax rate that we are looking at?
I think we have still got some carry forward losses.
How much is that, sir?
Not after this year, it will be around 24 to 25 crores remaining. And plus there is some deferred tax asset also, which is yet to be reversed. If you see our balance sheet, around 8.5 crores of deferred tax asset will also get reversed next year. So then after, yeah.
So basically 24 crores total.
Yes.
Okay. So next year we can utilize this 24 crores. So what is the tax rate? Have you some planned in the next financial year?
Presently, it will be a normal tax rate, but we have not
Okay.
gone into all what other benefits we will be getting. That will be, as we go ahead, that will be looked
Mm-hmm.
at.
Okay, okay, sure, sir. Got your point. Thank you so much. All the best for the future.
Thank you, sir.
We'll take the next question from Pawan Kumar. Pawan, you can go ahead, please.
I'm audible?
Yes,
Yes.
Pawan.
Yeah, thank you. So my question is like, you have an order book pipeline of roughly 2,000 crore. Are we also looking for,
We have inquiry pipeline of 2,000 crores.
yeah. So my question is, are you looking for other geographies also apart from India? Like we are exporting, I think, some of the geographies.
Yes. Now, definitely we are looking at overseas markets, and some of our clients who purchase from us definitely buy for their factories abroad, like Birla Carbon, Tata Chemicals. So if they have requirements outside India, definitely they consider our equipment. Apart from that, we are also seeing how we can, expand in Europe and Southeast Asia, and we are working on it gradually.
Okay. And sir, like with the acquisition of this ME Energy, what sort of synergistic benefits you are really seeing right now, apart
Right.
from at order book or maybe at a marketing level?
Okay. At a marketing level, how we see is that Kilburn's customers and energy customers can, be common, and the equipment that we offer actually consumes heat, and what ME Energy offers is extraction of heat. So we see, that's where we see the synergy. So when we go to the market, we can offer solutions for both these processes. As far as the numbers are concerned, in the past, the inquiry pipeline is concerned, in the past we had, somewhere around 1,000 to 1,200, which kept growing. Today it's around 1,500, and with ME Energy is 700 crores. I expect this to only grow further. The reason is that when we approach our clients, with the complete basket of our portfolio, obviously their interest rises, for both the reasons, ME Energy for its own brand name that it has had, and Kilburn for its own. And this is where we see a synergy.
Okay, sir. Thank you. These are my questions.
We'll take the next question from Pradeep Rawat. Pradeep ji, you can go ahead, please.
Hi, am I audible?
Yes, Pradeep.
Yes. Yes.
Yeah, good afternoon, everyone, and thank you for the opportunity. So I have a couple of questions. First, regarding the our peak revenue potential. So without incurring any capex, what could be our peak revenue potential?
Without incurring capex, you mean whatever we have planned, if we were not to incur that?
Yeah.
Let me put it this way, that our capex that we have been planning year on year has been more to upsell our products, in the sense like today we have set up a clean room at Kilburn where we can do these equipment where the material of construction is titanium. Okay, so this needs a special ambience for which we have set it up. So this definitely, would increase our revenue without really having a big capex or big capital expense. Okay, so we are not looking at any new factory or any expansion over here. With ME Energy, we have already planned this capex of, for setting up 2 bays. With both these and our current vendor base, we can expect a revenue of 500 crores plus. So does that answer the question, or you have something else
Yeah.
to ask?
Yeah. So past FY25, so we will be naturally targeting above 500 crore. So
Right.
how would we able to achieve that target if we have the peak potential of 500 crore?
Well, it could be organic, inorganic. We are yet to plan things.
Okay.
Just to address your concern on the capacity, a lot of our work is also outsourced, in the sense we have a lot of bought out items, and we also have contract manufacturers who can do our work outside our plant. So we are not looking at any compromise in terms of potential to grow. If there's enough orders which come in, the management is not restricted at 500 or 600 crores. If there any opportunity where we need to do any capex for a new plant, we will suitably plan it as and when required.
So, sir, how much of our work is outsourced, like in percentage term?
Sachin, can you answer that?
Pardon?
How much of our work is outsourced in terms of numbers?
Percentage-wise.
Around maybe 25 to 30% of our work is outsourced. But in terms of, if you see as a percentage of sales or subcontract cost is only around 7 to 8%. So that way also you can look at it.
Yeah, great. And my other question is regarding the execution time frame. So, after getting an order, how much time does it usually take to execute the order?
Well, it depends on the type of equipment, but we look anything from 4 to 5 months, right up to 11 to 12 months.
Okay.
It depends on the type of equipment.
Yeah. And with regard to our competitors, so who are our competitors and what sets us apart from them?
Who are our competitors? Well, we have multiple competitors. There's no one single company who can offer all kind of solutions, but for different segments, we have different competitors. For carbon black, we have a couple of Chinese companies. Then there's a one European company called Arvos. Soda ash, we have Andritz. Then we have few Chinese companies. For paddle dryers, we have Raj Process, Moj, Arrowhead. So for different products, we have different competitors. And what is our strength over them? I think our biggest strength is our customers. We actually start working with them right from the stage of conceptualization. So when they are setting up, they are planning to set up the expansion plans or new factories. That's where we do hand holding of each other, and we get the inputs from them. We offer them our solutions. This is our biggest strength. Second is that we have been in the industry for 4 decades. So a lot of knowledge equity has been created in-house. Okay, so this helps us in our edge, having an edge over customers. Third is that we see how we can increase the depth of manufacturing in the factory. For example, we have recently procured a vertical turret lathe. Okay, earlier that process was outsourced. Then we have set up this clean room. We have enhanced our metal rolling capacities, both in terms of volume and in thickness. So that's how we are trying to be ahead of competition. But the race will always continue. Needless to say that.
Yeah, great. And my last question was regarding the enquiries that we are seeing. So, with respect to specifically cement and metal sector, so how are the enquiries of late?
In the cement sector, we have recently, started a foray. In the metal segments, we have been getting inquiries and we have been offering. We already have got some orders also. One is from JSW. Yeah. But for cement,
I would request if Vijay can also highlight a little bit on steel and cement, because a lot of those inquiries are from ME Energy.
Vijay, can you address that?
As far as cement industry is concerned, we are entering into cement industry this year, and we hope to open our account, and that I think will open a lot of opportunities for us going forward. As far as steel industry is concerned, we are well entrenched, and almost all the large integrated steel manufacturers are already our customers. We are executing jobs for them, and as they expand their facilities, we keep getting inquiries and we keep getting orders. So, right this year itself, we will have out of the MEN's review, maybe 50-60 crores will come from steel industry itself. So, steel industry, we are very well entrenched in almost all the steel manufacturers, whether it is AMNS or JSW or Steel Authority or any of these.
Great. And thank you and all the best for your future quarters.
Thank you.
Thank you. Thank you.
Thank you. We'll take the next question from Jinesh Sipani. Jinesh, you can go ahead.
Yeah, thank you for the follow-up. Sir, I'd like to ask what kind of revenues we are targeting for ME Energy and order inflow of ME Energy for FY25?
For ME Energy, revenue definitely would be more than 100 crores this year. They should cross that.
And order book?
Order book, I would say that we are definitely looking at more than 100 crores. But I would say at a group level, what we are looking at is 500 crores. Let me put it at a group level.
Okay, and have we started bidding or receiving any orders from cement sector?
Yeah, we have recently bid for a job with one of the largest cement manufacturers. Soon we should have a good news about it, maybe in this quarter itself. And that I think is a large door that is going to open for us.
And sir, how much percent or how much capex value can we provide for cement sector in ME Energy?
Capex?
Yeah, how much capex value we can provide?
I didn't get that question.
Basically, if they're setting up a cement plant, equivalent investment that goes into our product.
Presently, I do not have the number because as far as I said earlier, first time we are entering into cement industry. This is one exactly. I don't have the numbers. Second thing is, it depends upon the kind of plant and machineries that they install. All the plants may not go in for certain, say for example, waste heat recovery from all the equipment. So it keeps changing. Our contribution to cement industry will be on waste heat recovery boilers and some hot air generating systems. So if the customer plans to go for waste heat recovery system, there is an opportunity for it in that particular plant. So as of now, presently we do not have. We are still studying that market because we are on the stepping stone presently. Probably going down this year, maybe a couple of quarters later, we'll have numbers and total sales and marketing plan in place.
Okay, and the last question, which sector are you planning, are you seeing growth in ME Energy? Which sector? Cement sector, steel sector?
We have a lot of work from steel industry. We have a lot of work from food industry. We have work from carbon black industry. We have from chemical industry. These are 3-4 leading sector which gives us which are in our books and inquiry pipeline.
Okay, thank you, sir. All the best.
Thank you.
We'll take the next question from Navdeep Singh. Navdeep, you can go ahead.
Yeah, thank you, sir. Thanks for the opportunity. And, I appreciate all the hard work that has been put and the great numbers are produced. So, sir, actually, my only question is, what is the meaning of inquiry of 2,000 crores? Like, is there any pipeline which which is going to be converted into the orders, or how it works?
So the inquiry pipeline is nothing else but the inquiries that we receive from the customers or what we are soliciting in the market. Okay. Obviously, we have our own hit rates and not everything gets converted into orders. Yeah. We could have a success rate of 20%, 25%, 30%, whatever. But at any point of time, it's very important to have a healthy pipeline. At any point of time, it is very important to have a healthy pipeline of inquiries because that keeps into the future orders coming. So that's what I meant by 2,000 crore plus pipeline.
Okay. The reason I asked is actually, if I see the current order book, so it is around 280 crores. Correct. So, like to complete the orders for this financial of 500 crores, which you have guided. Correct. So we need around 220 crore of orders in hand.
Right.
And I think this particular, if we talk about the quarter, so that is already gone. So 220 crore plus orders plus we would be needing, if suppose we would be working, we would be guiding higher for the next financial year. So we need something in our hand. So are we expecting something kind of like 400, 500 crores for that in next maybe 3 quarters or so?
Yes, we are targeting 500 crores plus orders in the current financial year, of which I
Okay.
just we've received around 65 to 70 crores. And going forward, as the year goes by, the quantum will increase.
Okay. Okay, sir. Actually, I was only looking for this pipeline. Otherwise, I can see the kind of money you guys are putting, like maybe preferential allotments and the buying the stocks from the market. This shows that you are having very good confidence in the company. So thanks a lot, sir. That is all from my side.
Thank you. We'll take the next question from Dilip Sahu. Dilip, you can go ahead, please.
Yeah, can you hear me?
Yes.
Yeah, thanks. Thanks for the opportunity. Sir, I just wanted to know, in the last 7, 8, 10 years, our average revenue has been around, ranging around 100, 150 crores, excepting for last 2 years, which is kind of double to, 250, 300 crores. So what exactly happened apart from the capex upswing that we see, which is there in the news and in the market? Is there something fundamentally changed about the company, because both profitability and revenue kind of shoot up?
Right. So definitely a lot of changes have happened in the organization as well. The promoters and the board of directors have put a new management in place, and we have a very aggressive outlook. We are very aggressive in getting orders. And definitely when orders come in, we also need to put a lot of capex, a lot of processes in place. So a lot of work is being done on that area. So that comes on the supply side. On the order side, definitely the capex has also grown over years. In the last 10 years, you must have seen the growth that has happened. And especially in the last 2 to 3 years, a lot of demand is existing. And at the same time, we are aggressive. So it's a win-win for us.
So we essentially rode the capex wave, as well as we took market share from.
If I can just add also, we've as a new management and as a company, we've also added and entered into a new product ranges as well. So if you see what was the situation a few years ago, our inquiry pipeline was much smaller. So we've entered new industries, we've added new products in the same industries, which has helped us also increase our product offering. And also, from being a pure equipment manufacturer, we are now providing more solutions to most of the clients. So we are increasing the value of the business which we were getting. So instead of just providing an equipment, we are providing peripheries around it. We are giving it more like a solution. Thereby, that is also helping us increase value and ticket size of the orders. So earlier we were handling a lot of small orders. Now we are handling lesser number of orders, but much more higher value of orders.
Yeah, good. Yeah, understood that. In your presentation, you talked about 200 plus people. If I assume 200 people, I assume that these are all customized orders. Every order needs design and engineering and manufacturing, which are separate from others. So are we well staffed for this kind of, and what is our investment in building a automation, automating the manufacturing as well as the pre-manufacturing activities?
We don't need too much of automation. As Mr. Lala also mentioned, we are investing on some equipments to bring more agility into our manufacturing. When you talk about customization, yes, there is a lot of customization involved, and that is how the value of the orders have also gone up. But we are adequately staffed for the business we today have. And if you see, our employee costs are also going up because we are continuously hiring also as we go.
Sure. And my second question is about the numbers. You have consolidated around 36 crores, which is like 40 days of the subsidiary. And if I look at separately, one is 295 crores, the standalone business, and 75 crores for the other business for the year I'm talking about. So if I had consolidated for the year, it would have been around 370 crores of the total business, which is going to say 500 crores. So, I'm just trying to understand that, if we look at a fresh 500 crore, what kind of hit ratio we need to target on our pipeline? Like, what is our win ratio currently, and how is that need to change? Is there optimism built in with that win ratio? My question was that.
You see, as was mentioned, the inquiry pipeline is over 2,200 crores. It is not exactly, we are not that exactly focused on win ratios, because there could be some orders which are very high value. So there are certain inquiries which we are today handling, which could be alone 150 crores. So that one single win itself could take care of 25% of the year's order booking. So I don't think that is the best way to look at it. It is about prioritizing and ensuring that some key customers who have a long relation with us, we continue to service them and ensure those orders come. And automatically the pipeline will get filled up.
Sure. So my last question would be, we have traditionally, from what I understand from the discussion so far, you had a traditional strength in certain products and technologies, and you have some relationship with customers in segments like, what we are focusing, carbon black, soda ash, and now cement and steel and all that stuff. So do you think that this kind of a run rate, which is like say 25% average, to maintain for next say 3 to 5 years, which is kind of taking you to 1,000 crore kind of a revenue in a 4 to 5 year time? While I understand it's too long and too hazy to forecast for 4 years, but from looking at the kind of planning your customers have, do you think organically with the current assets you can grow at that 24-25%? Because the budget and the outlook of your own customers for next at least 2-3 years. These are all core core sectors, and any planning happens 1.5-2 years before. So does it look like
we would be comfortable first crossing the 500 crore milestone this year, and then maintaining a steady run rate of growth in the coming years? You would have seen that we have grown pretty rapidly last 3 years. So I hope that we are able to continue a decent run rate going forward. But it will be premature to give you a exact figure or a trend. But all the management is working on is to continue growing at the similar growth rate in the coming years. But I think this time next year will be a clearer picture to put a trend on where next the company would be headed.
Great. Thank you. And if I may ask one last question, is there any other business, because manufacturing is changing rapidly, and as you rightly said, you have moved from product to solution. Are you trying to look at the ambit of the solution in a much larger way and go to maybe the ancillary or neighborhood kind of product in next 2 to 3 years?
So we always look at how we can improve our product offering for industries. So as and when any opportunity comes to increase our product offering, we would definitely add it to our portfolio.
Yeah.
Okay. And ME Energy is one casing example of that.
Absolutely. Sure. Thank you very much.
Thank you. We'll take the next question from Karthik Bhatt. Karthik, you can go ahead, please.
Yeah, am I audible?
Yes.
Yeah. Thank you so much. Congratulations on the good set of numbers. So my question was on the order book. So what percentage of the order book is from exports? And has it increased or remained the same YOY?
Sorry, I didn't get your question. Can you come again?
What percentage of the order book is from exports, and has it increased or remained the same YOY?
From where? I didn't get that. Sorry.
Exports.
Sachin, are you able to get that?
Yeah. Exports have slightly increased. We have received around 40 crores of orders this year compared to around 30 crores last year from of the exports.
I was talking about the order book, so it's increased by YoY, right?
Yeah, it is increased.
Okay.
Order inflow from
And my
exports.
other question was on the technical collaborations that we have with Nara, Carrier, and so on. So, is there any ballpark revenue contribution? As in what stage are these tie-ups in currently? As in, is the revenue contribution fairly substantial from these tie-ups? And what is the tenure of these collaborations?
Well, they've been here for more than 10 years now, I think. Sachin, since how long we had this Carrier and Nara tie-ups?
More than 10 years. More than 10
Yeah,
years.
it's going on. So we offer equipment of their design as well. And we are also open to any further tie-ups. So that's the way it is.
Okay. And sir, if I look at the orders received, I think in Q4 it is 790 crore. In Q3 it was higher at 945 crore. And is it due to some seasonality, or is Q3 better historically also in terms of order inflow? Or
Typically, what we see is that Q1, the order inflows are always a little slower. Yeah. They pick up in Q2, and Q3 and 4, they actually, reach the peak. So, I mean, it just follows the quarterly cycle. That's all I can say.
Okay. And sir, I think you mentioned in the last call that especially with air preheaters also coming in, 40% of all equipment would be available to set up a carbon black plant.
Vijay, can you take that? Vijay, are you there?
Yeah, when we say 40%, this thing 40% of the cost of plant and machinery, it is not for the complete project. When someone says 10,000 crores investment on carbon black, this means they may have land and building and many other things. And the current Epsilon Carbon, for example, as we explained earlier, the investment is on carbon related product. Many of these carbon related product like batteries and things, battery related and things like this, EV and battery related. So with respect to carbon black per se, if you take a carbon black product line, we have around 40%. Yeah.
Okay, and sure. Okay, thank you so much. That helps.
Yeah.
Before we go to the next participant, we'll take the questions received on chat. There's a question from Mayank Shah. He wants an update on the silos business. According to him, in the previous call, we mentioned that the company would be looking at silos business on the EPC side of it. So is there any update on that?
We are already executing the current job. We have no other new order which has come on the silo space.
Okay, and there is a question from Samir Palod. What's the maximum possible turnover at full utilization of capacity at Kilburn plus ME?
As we've mentioned, Vinay, in the past, because ours are all customized jobs, there's no particular turnover we can cap our yearly capacity at. It really depends on the type of order inflow which comes in. So we can definitely take out 600 to 650 crores between the two plants, but it's very difficult to put one particular number.
Okay. We'll go to the next participant now. Bharat Gupta, you can go ahead, please.
Hi, am I audible?
Yes.
Yeah, thanks for the opportunity, sir. Congratulations for a great set of results. A couple of questions from my side. So, with respect to ME Energy, the cement sector, I think, which we are targeting, so the technology has been developed in-house, or there has been some sort of a technological transfer which we have been able to do?
Energy has the capabilities to do this equipment for waste heat recovery in-house. Maybe one or two additional resources may have to be added. With respect to, so if you look at the resources required for entering into cement industry. One is the design related, second is the manufacturing related. Manufacturing related, we are there 100%. In terms of design, maybe we are there 75-80%, and balance is being built up. And this will be done internally by adding resources and upskilling people who are already here.
Sir, can you give a further color, like with what can be the maximum potential, which because annualized would be there with respect to cement industry. So any colors on that front, like what kind of a potential this segment carries for us?
As I mentioned earlier, we have not. We are just at the stepping stone into cement industry. The marketing, market data collection, and other things are still on. We are not there, so we're not able to provide anything further. This is maybe in 2 or 3 quarters down the line, we will be ready with numbers and our consolidated plan. Presently, our effort is to get into the first job and build what we call as a past track record, which is a major pointer for, or major aspect of we getting more and more business from this industry.
And sir, the order size would be on a higher side as compared to the Kilburn standalone entity, I think, with respect to the cement sector alone.
Yeah, if you the waste heat recovery, there are 2 or 3 type of equipment that we can offer for cement industry. So if we talk about their waste heat recovery boiler systems, the orders could be the range of say 40 crores to 100 crores, 120 crores, depending upon cement plant size. And there are a lot of opportunities which are coming up as well as, and then the retrofit business is also there quite a bit. When it comes to the hot air generation and other things, the opportunities are much less. These are 5 crores, 6 crores, that kind of packages. That is mostly where they have only the grinding of the product and packaging. But if you have the full cement plant, they have waste recovery on the main line also.
That's really helpful, sir. Just a last question from my side, like in terms of the overall capex plan for ME Energy, what can it be for FY25 or FY26?
Presently, it is the capex is in the range of 10 to 15. This will increase the space under crane by almost 50% for ME Energy, and I think this can take us we will help ME Energy to enhance its capability. I mean, in terms of turnover that can be produced out of this plant.
Okay. A last question just on the Kilburn side. So in terms of the export strategy, so how are like we are trying to approach the market in a way? Is there any sort of a pressure which is built in the domestic side as well?
Well, for the tea industry, we already have a setup, and we are doing pretty well. As far as the exports for our current customers are concerned, they always look at us for solutions, as I mentioned about companies like Birlas and Tatas. Yeah. And then gradually we'll build up also for, increase ramping up our exports. It'll happen over a period of time.
Right, because one of the PSA was mentioning that there has been a slowdown in terms of the order inflows with respect to the petrochemical industry as well as the oil and gas industry. So have we seen anything on with respect to our order inflows as well?
No, not at all. In fact, we are expecting major orders from the petrochemical and oil and gas in the current year, or maybe let me say next 12 to 18 months. Depends on when the customers come out with the expansion plans. So we are well placed. And I think as a country, as India is growing in petrochemicals, so we don't see a challenge there.
Right. That's it from my side, sir. Thank you so much.
Thank you.
Just a follow-up question on the chat, Amitanshu from Samir Falod. The 650-700 crore that you're saying we can do from both the entities, what further investment would be needed beyond that?
As I mentioned, that's just that depends on the type of order inflow which comes through. But from a capacity point of view, ME Energy plant itself, once the capex is done, should be able to deliver 200 to 250 crores, some part would be outsourcing and then some part would be in the Kilburn plant. That's how the breakup would be.
Okay. We'll take the next question from Dhaval Jain. Dhaval, you can go ahead, please.
Hello, sir. Am I audible?
Yes.
Yes.
So I just wanted a bit more depth on our product profile, since that we get orders from different sectors. I just wanted to know what exactly, how critical our products are and what exactly do we do in helping these sectors.
Well, I can give you the list of products that we manufacture. I already mentioned we are into paddle dryers. Let us say they have different applications in the food industry and in the wastewater industry. Then we have VFBDs. We have rotary dryers. So all these are used in different industries. But what I would recommend is that you visit our website. You would probably get a lot more details over there and a fair idea as to what we can offer, what kind of equipment gets into which sector. I think that would be a better way of doing it.
Right. And I just wanted to know, like, if we get orders right now, what is the conversion time it takes for our orders to get executed?
Well, it all depends. Conversion time for the order to execution or from inquiry to order?
If possible, you can guide for the both.
Okay. From inquiry to order, it all depends. It can be just 2 months to, let us say, 6, 8 months or 10 months, especially when we are working with the customers, from the stage of conceptualization. And when it comes to order to execution, I mentioned earlier also, it could be between 4 to 6 months, right up to 11 to 12 months. It all depends on the type of equipment we are offering.
Perfect. That's all from my side, sir. Thank you.
We'll take a follow-up question from Pawan Kumar. Pawan, please go ahead.
Thank you for the follow-up. Sir, as you mentioned, like ME Energy having a EBITDA margin of roughly 12-13%. Can we expect the improvement going forward?
Definitely, ME Energy's EBITDA will improve as we ramp up our turnover in the coming financial year and going forward. There'll be major improvements, and as my colleague said, our guidance is the EBITDA of around 20% on consolidated basis.
So can we see, like, for ME Energy, it's like reaching roughly 17-18%. Can we anticipate that also going forward, maybe in years to head? Or is it too much to ask right now?
Yeah.
I think let us keep it to a consolidated number. When the company is guiding for a 20% consolidated number, then obviously ME Energy will also have to be closer to those numbers to get the company to achieve that.
Yes.
Yeah. And the second, just follow up, like for Kilburn, how much capex spend we are doing this year?
We are doing approximately 10 to 12 crores kind of capex annually.
Okay, and what is the typical asset turnover for this industry?
Sachin, can you address that?
No, immediately I don't have that figure.
Okay.
Just you.
Okay, thank you. Thank you for all the answers.
Thank you.
Thank you, Pawan. Since that is the last question for the day, I would request the management to give their closing comments.
Mr. Khaitan, you would like to say something?
No, I would just say thank you to everyone who's taken out time to attend the call today. The management seems to be very positive on the outlook going forward for the coming year. Ranjit, if you have any other closing remarks, you can please mention.
No, I think I've already expressed that we are very positive about the current year and the way forward. We're looking forward to the synergies between us and ME Energy. So yeah, good times ahead. And thanks to all of you for having joined us for this call.
Thanks to all the participants for joining on the call, and thanks to the management for giving us their valuable time. That brings us to the end of today's conference call. You may all disconnect now. Thank you.
Thank you. Thank you.
Thank you very much. Thank you.